No video on YouTube goes this in-depth into market reversal patterns. Many videos teach these patterns, but they only give the surface level that can get traders into trouble. The title said 3 patterns, but it, let's do 4 or 5. What trips up a lot of traders is what I call a failed breakout. You have a pretty clear zone based off of multiple touches in the market, and then the zone breaks and they say, okay, the market just broke through my level, it's over. There's some really strong engulfing candles breaking through this. That's a good confirmation. And if they're a breakout trader, they'll bet that the market's gonna go down here saying, hey, it broke this support, I'm gonna get in short here and make a lot of money. And in reality, that doesn't happen all the time. A lot of the time, the market does a fake out and immediately rips back higher, does a nice bait and switch on people, and then takes off after that. Now, this is a really powerful tool you can use to still take a trade even when your level gets broken. Now, the biggest thing you want to see is you want to see the market rip back into the support level, because this shows that it really has just reversed and trapped a lot of people. Because of those breakout traders, they'll be betting that the market's going to go down here. Well, if they see the market rip back higher on them, they're going to say, okay, maybe I was wrong, I should get out. And that's going to help push the market up. And a lot of times with these, this can be market manipulation with bigger banks seeing this support level. I mean, this is pretty clear with all these bounces. They'll say, hey, let's break through this level, either get a lot of people stopped out or get a lot of people betting that it's going to go lower, and then just rip back up and then actually make it go long. And so this is a really powerful tool to see when the market is actually reversing when you initially thought that it was gonna keep continuing that trend line down. Now, the next one is a classic head and shoulders reversal strategy. And I would say this is one of the strongest reversal patterns that there is if used correctly. It is created by having 3 swings in the market. And what we're looking at right here is an example showing you that the market is going to reverse back lower. And it's called the head and shoulders because the idea is here's the head, and just show you how terrible of a drawer I am, here is the shoulders. But what you're essentially looking for the market to do is have a swing in its uptrend, make a higher high, and then make a lower high. So if we jump into a live example here, you can see that head and shoulders clearly as the market starts to reverse here. We have that upper high here, and then those 2 shoulders are about the same height. And the main idea with this is it's showing you that loss in momentum. The higher highs and higher lows that the market makes in an uptrend start to shift in the lower lows and lower highs. And the first trick that I like to use with these is, if we quickly go back to our example here, is you can see that the shoulders are the same height and the neckline that we have here is the same height as well. And so for me, when I'm reading the price action, that shows me that there is uncertainty here in where the buyers and sellers are. A double bottom is actually sometimes a reversal pattern that can show strength, that there is a support level here. But in this example here, you can see that the neckline here is slanted, that the pullbacks between the 2 shoulders here are at different levels. And what that tells me is that the buyers are able to break through that previous low, showing more strength on the downside. That's the first trick to seeing that this pattern is actually gonna work out, because of course, like every pattern in the market, it's not gonna work out every time. But when you see the lows getting lower, and with these shoulders as well, it being lower than the previous one, that's showing you a confirmation that yes, sellers are coming in. It hasn't made a double bottom here. And it's actually showing weakness in the shoulders as well, versus it having the same exact price. And so the last key part about head and shoulders is, what does the final move of this extreme high look like? Now, in this example, it is a final exhaustive move. You can see that there's really strong green bars punching up here. And then when it decides to reverse, you have a massive red bar here, followed by a couple small bars, and then more massive red bars. That's showing you that big sellers are coming into play, that they say, hey, we like this level up here. And that's what pushes the market down like that. And so it's showing you that the big players are getting in short here. And this works just as well on the flip side. Here's another quick example. We have our downtrend, and then we have our head and shoulders formed right here, and it reverses off of that. And again, the keys that we talked about the last example of why this was successful is that in our head and shoulders pattern right here, we had that break of that neckline here. And then as well, this shoulder is slightly higher than this one over here. Now it's not that much, but it still is higher, showing you that there is strength there and that buyers are coming in wanting to get in on this market. Now there's not as much of a flush lower here, but there is good strength in the bars coming off of this level, showing you that there are buyers wanting to come in. Now, the last key thing to making these successful, kind of like with any reversal strategy, is use these at a previous level. So if we scroll really far back, there was a previous resistance level here that turned into support. You can see the market bounced off of this area now. And if we pull that all the way across, you can see that this head and shoulders is right at that level. And so coupling any reversal strategy with a level like this is going to improve its ability to work out. Now, the next one is your basic double bottom or double top. Now, these are super simple. All the idea here is the market's bottoming twice in the same area, and that is showing that there is either support or resistance coming into play, and the market is going to potentially reverse off of that area. Now, just like the last pattern, I would always suggest not blindly jumping into random double bottom that you see. It's always best to line it up with a previous support level. And so the market's already reversed off of this area right here already. And so I'd say, hey, if the market comes back down there again, that's probably a good spot to buy. And so I'm going to put a support zone there and just say, hey, if the market comes in this area, I'm going to look to get in it. And so what we have here is the market comes down, and it almost makes a triple bottom here. But the way I see this is it basically makes a double bottom here. And you can just get in based on that once you see the market start to pick up here, and then it'll reverse from there. And then on the flip side, the market has a really good resistance level forming up here. And so you could probably call this a double top right here, a larger double top. But right now I'm on a 1 minute chart, and right here, this is a pretty good double top too. You have a really nice rejection bar right here, and I would say that's starting to form a double top. And if I was trading, I would jump in on a short on that, betting that it's going to go lower. And that was a really good spot to get in because the market ended up puking lower off of that. I like to use double tops as either confirmation to get in or as confirmation to make a new resistance level. This double top right over here was great, but we didn't necessarily know there was a resistance up there. But once the market came up and touched this area a couple of times, you could say, hey, yeah, this is an area where the market's going to sell off and we're going to get short in. Now, another key reversal pattern is using a trend line. When the market has a really clear trend line in place, well, quite often when that trend line breaks, the trend is going to shift. And so this can be a really powerful tool, especially if you couple it with some of the other patterns we just looked at. Now, just because you see a trend line get broken definitely does not mean for you to just jump in betting that the market is going to reverse. Of course, you always want other things in place. Now, one thing I've discovered with these trend lines is quite often when they are actually broken, they like to retest and attempt to continue that uptrend that it was doing before it ends up actually reversing. And so if you see a trend line break, you can wait for it to make that retest, and you can get in based on that and get an actual better entry when you're looking for a reversal. And props if you actually recognize this, there is a head and shoulders pattern right here. Coupled with our trend line breaking right here is an awesome confirmation that yes, the market is very highly likely to reverse here. And so what you can do with that is after seeing this initial break and expecting that the market is going to make this second shoulder, you can try and get in on that second shoulder. And so once you do, you get in there, bet the market's going to go lower, and you get a really nice move to the downside. And so let me show you what an actual trade looks like using these reversal patterns. And so first off, we have an uptrend here showing us that, hey, the uptrend is going up, and boom, it's broken that. And second, we have a head and shoulders forming. If the market ticks up here and starts to reverse lower, that's going to show us that, hey, it's confirming a head and shoulders, and boom, right there we have a big bar making that shoulder. And I'm going to bet that the market is going to go down based on we have our uptrend broken and we have a really clear head and shoulders pattern forming. And then the third thing is, if you see this box up here, That's just a previous resistance level I drew off of a double top. And then for me, when I trade on this, I like to put my stop above the head of the head and shoulders pattern, because in my mind, that's an extreme of where the market probably won't retest again if it's gonna work out and reverse back lower. And then from there, I just have a simple management strategy. I actually like to use a trailing stop. As soon as the market breaks out like this, I like to move my stop to break even, because let's be honest, we all like taking risk off the table. Just manage the trade as I see it. Now, there's a lot of different type of trailing stop strategies you can use. I actually made a video on it. You can check that out. But with this trade, all I'm gonna do is once I get up a certain amount, just to give you a quick rundown, is I like to start trailing with the previous highs of the candle, because hey, this market's puking lower. That's awesome, we're in it, but we don't want it to reverse and give that money back up, right? And so it's gonna knock me out right here for I think about 450, which is about 2.5 times my risk. Great risk reward. And so if you wanna learn more about this trading strategy, check out this video right here. And if you wanna just learn everything I know about trading, I do have a course that I link in the description below.